Here's why you need to buy company assets in a separate company and not in your main trading company. Any substantial assets over sort of 50 grand and above is worthwhile setting up a separate company. This can be a fleet of vans, a commercial property, a residential property that if you own a property business. And we could also be looking at any larger office equipment, plant and machinery. So all them kind of assets are worthwhile putting in a separate company. There are a number of reasons for this. Number one, and the main one, risk mitigation. You do not want your main assets within the trading company. If anything was to happen to that trading company or end up in cash flow issues, creditor issues, being sued for external issues, you want your assets ring fenced in a separate company. This protects them. This means that they can't go down with any problems within that trading company. Number two, you're looking at tax planning opportunities. By having the separate companies, you can set up lease agreements, hire agreements, offset the profits and costs of that asset against the main trading company, and there's room for fluctuations there. So that can be a useful tool. Finally, finance and leverage. The companies are more often than not going to want it separately ring-fenced in a separate company anyway. This gives them less risk and more likely to lend based upon that. They themselves are not going to want operational risk, potentially bringing down assets that they've lended heavily on. Common mistakes when setting up these are putting the assets in the trading company. You do not want to do that for the reasons I've just listed. But then when you have that asset company set up, you want to be making sure you're tracking intercompany loans, making sure there's a lease agreement in place between the two companies that formalizes it not only between HMRC, creditors, lenders, but also between you, your accountant. You understand the plan, how long it's going to take to write off any potential loan the trading company's made, what sort of profits you're looking to offset against the company. So they're the common mistakes. Make sure you work with your accountant to set this up right.